Would you invest $500 a month if it could grow to $1 million? That's exactly what this video is about. If you put $500 a month into VOO, an ETF that tracks the S&P 500 and the market returns about 10% a year, in 30 years you could be looking at roughly $1 million. ETFs are simple, diversified, and beginner-friendly. But if you're brand new, the choices and jargon can feel overwhelming. In the next minutes, I'll show you what an ETF is, how to pick winning ETFs, where to buy, and a step-by-step process to place your first order. Now, what exactly is an ETF? Think of it as a basket of stocks. Buy one ETF and you own hundreds of companies at once. For example, VOO owns the 500 biggest companies in America. It's like buying the whole team instead of betting on one player, so you sleep better at night. My first introduction to the stock market was with ETFs, and they quickly built my conviction. Why? Because I wasn't betting on just one company. I was investing in several at once, which significantly reduced my risk of losing all my money. As an economist, I'm always looking for ways to earn more while spending less. ETFs answered a simple question for me. Can I invest without paying ridiculous fees to brokers? The answer was yes. ETFs are cheap, efficient, and built for regular people like us. Over 23,000 companies went bankrupt last year. Imagine betting your retirement on just one of them, gone overnight. But with an ETF, you spread your money across hundreds so you don't wake up to disaster. With ETFs, I don't worry. Even if one company fails, I still own hundreds more. I don't track the market, I don't chase stock tips, and I don't panic about headlines. I invest and life goes on. Now, the $1 million question. How do you pick the right ETF? I'll show you the exact 3 steps I used to pick my first 3 ETFs. Simple enough for a complete beginner. Step 1. What ETF options are actually available to you? Because there are thousands out there and picking blindly can get overwhelming. Broad market ETFs. These cover the entire market. Example, VTI, the total US market ETF. Dividend ETFs. Focus on companies that pay steady dividends. Example, VYM, High Dividend Yield ETF. Growth ETFs, target fast-growing companies like tech. Example, QQQ, which holds the NASDAQ 100. Value ETFs, invest in undervalued, stable companies. Example, VTV, the Value ETF. International ETFs, own companies outside the US. Example, VXUS, Total International ETF. Just knowing these 5 categories already puts you ahead of most beginners. Next, step 2. How much will it cost you to invest? Every ETF charges something called an AUC expense ratio. If the expense ratio is 0.03%, that means for every $100 you invest, you pay 3 cents a year. That's nothing compared to traditional mutual funds that eat away at your returns with huge fees. The golden rule, look for ETFs with expense ratios under 0.1% whenever possible. Cheap equals powerful over decades. And finally, step 3. How popular is this ETF? This is called liquidity. In simple terms, how easy is it to sell if you need your money fast? The more popular the ETF, the more buyers and sellers there are, which means your money isn't trapped. That's why I only stick to the big, well-traded ETFs. One thing you don't need to stress about is where to buy your ETF. Almost every broker offers them. Just look for platforms with house, 0 trading commissions, and easy auto-invest features. Some solid options: Fidelity, Vanguard, Charles Schwab, Robinhood. So let me quickly walk you through how simple it is. Here's how you buy your first ETF in 5 steps. 1. Open a brokerage account. 2. Deposit funds. 3. Search the ticker symbol, YAS. For example, *VOO*. Select Buy, choose how many shares or just a dollar amount. 5. Review and place the order. Pro tip, start small, even $50. The key is to build confidence, not perfection. Now before you start, let me save you from the rookie mistakes I see all the time. Don't chase hot ETFs with 0 research. Don't sell in a panic when the market dips. Don't forget to reinvest your dividends. And never invest money you'll need in the next 5 years. ETFs are one of the easiest, smartest ways to build wealth over time without stressing every day about the market. Start with one solid ETF, invest consistently, and let compounding do the heavy lifting for you. If you want my list of 5 beginner-friendly ETFs, check the link in the description. And if this video helped, hit subscribe, because the next strategy could change the way you invest forever.